So macroeconomic chaos ensues as Bitcoin tries to stop the bleeding at $19,000. We've got President Biden saying that recession can be avoided. At the same time, we're seeing Britain warn of just 3 days to go before things will get painful. Inflation continues to be persistent, with the latest reading coming in higher than expected. What is going on? What does this mean for the Bitcoin price? We're going to go straight into the charts now. And as always, guys, if you want to buy any crypto, check out the link in the description to BitGet or Bybit. Bitcoin is trying to hold the bleeding. We're sitting here at 19,000. We got the break of trend to the downside. And remember, we said that we're very likely to come to the bottom of this channel, which I had marked out at 18,700. And it's a great place to be doing a little bit of dip buying, in my personal opinion. Now, you could see yesterday on the 4-hourly candle, we wicked down to 18,800, just $100 shy of it. It's a nice time to start picking up. And now the question is going to be, do we hold from this level or do we bounce? Every other time, as you can see here, guys, we've bounced at this green line. Will we break it? Remember, the more times you test a support level, the more likely you are to break it and head to a lower level. And if we break it, where are we going to be heading? Well, the first point of call is 17,600. That's our local target here on the short-term price range. Can we wick down to that? But longer term, I shared with you yesterday that we could be copying a pattern which we had play out in 2018. So go watch that video to understand exactly what's going on here. But that could give us a price target down to 13,900, which would not be fun. Let's take a look at the Fear and Greed Index. You can see we're sitting at 20. Market's starting to get a little bit fearful again. A lot is going on. I mean, let's take a look here. Biden is saying there will be no recession. He doesn't think there will be a recession. If so, it will be very slight, he says. Well, so it's a bit of a silly sentence, right? There will be no recession, but if there is, it will be very slight. So he's already admitting to the fact that there will be a recession, and you guys know my view on this. We've already had 2 quarters of negative growth in the US. Their semantics are not going to fool me. We know we're in a recession. Now, when they want to define it, that's up to them and their political gains. But as far as I'm concerned, we are contracting in the US as well. In terms of Britain, we continue to have issues with the Bank of England continuing to reiterate the fact that they will only be buying bonds until Friday. Now, this seems like, you know, a kind of kid cornered into a corner and just kind of screaming out to the bully, like, back off, when really you have no substance, right? Bank of England, you have no choice. If pension funds continue to freak out and continue to sell your government bonds, you have to step in and continue to buy these government bonds. So they're just putting these fake warnings out there to show that they've got control of the situation. They have not. Just like the US, inflation is persistent here in the UK, but the only difference right now is the Bank of England is having to print. There's still quantitative easing at the same time as rating hikes. Insane stupidity as far as I'm concerned. And this is the risk that the US could be heading into the same direction as well. More about that in a little bit. Now, yesterday we covered off the fact that we had the IMF cut the global growth forecast. Today, we also had the producer price index, which is a producer reading of inflation. Not as important as a CPI, which comes out tomorrow, will be coming off, but still it shows a rise of 0.4% versus 0.2% month on month expected. So in other words, inflation continues to be there. It's not going away. Now, why is this important? Well, we know that the markets are waiting for Jerome Powell to do what is called a pivot, to go from raising rates to start cutting rates, but he cannot do so until inflation is brought under control. And you can see the markets here. Let's take a good refresh of this just to make sure we've got the latest reading. 82% of the market is now pricing in 75 basis points for the next rate hike, which is just over 2 weeks from now on November the 2nd. So that's going to be super important when that FOMC meeting comes. Now, let's take a look here at the Bitcoin chart and a few things I do want to share with you. And the first thing I want to share with you is this pattern. We were monitoring this pattern on the weekly. You could call this an expanding megaphone pattern. And as you could see, I demarcated the idea that we could be spending a lot of time here along the bottom and then potentially breaking to the downside, right? Breaking this wedge to the downside. Now, what's worrying is how much time we're spending at the bottom here. Ideally, if you're going to maintain some sort of bullish hope, you'd have a couple of positive weeks leading into the middle of this pattern here, but we've been unable to do that. In fact, like I was sharing with you, we are actually in this descending triangle pattern, which if we break to the downside, will take us to some horrible price targets down at 14,000, 13,900 range. That's what we're watching out for here on Bitcoin. The GBP is now now trying to bounce somewhat a little bit here intraday, up 0.8%, but still showing very weak signs, which is allowing the dollar index to show continued strength. Remember, this strength from the dollar index is what's keeping risk off assets low. It's what's keeping Bitcoin low as well. So we need to keep an eye on this because we need this to start cooling off. And one way we could start to see a call off is if we get a lower high. Remember here we posted this high. The only positive sign is if we fail to beat this high. Can dollar index get rejected from here, create a lower high, and then we could have a double top pattern, right? We could be creating this M pattern, which is a bearish pattern which can break to the downside. So that's a little bit of hopium that we need to look out for, but the benefit of the Dow has to remain to dollar index. We cannot just assume that we're going to run to the downside. Most likely we are heading to the upside. We've got to keep that bias with the dollar index. Also, later on today, we get the FOMC minutes. We will be looking out for that to see what do they say in that. But again, most of the times it's anticlimactic. It's stuff which has already been said in the past. We saw the press conference, and so markets may react slightly and traders will take advantage of that. But in the great scheme of things, I don't expect anything new to come out of those FOMC meeting minutes, which we do not know already. More importantly is our CPI reading tomorrow. That is the critical reading. We're sitting at 8.3% in the last reading, and we're expecting 8.1% as the consensus estimate. So we want to see this come down to 8.1% on the the headline inflation reading. So we'll be monitoring that together tomorrow here on the channel. So make sure you are subscribed. Really cool new feature here by Bybit, guys, which I've got to share with you. So happy that they've shared this. Finally, you guys know we love to do dollar cost averaging, and what it's allowed me to now do, and this is at no cost to you guys, is create a starter bundle. So I've created a set of tokens, a set of 6 tokens: Bitcoin, Ethereum, Phantom, Near Protocol, Matic, and Cardano. And I'm going to be creating different bundles so you can check out which ones you like. And I'm going to put them as link in description. And what this will allow you to do is you can just go ahead and purchase in the same percentages as I've set out in this portfolio. As always, do your own research. This is not financial advice, and just use this as something representative or to make your life easier in purchasing whatever you wanted to purchase. So you can go ahead and buy these in the same quantities, or even untick some if you don't like it, and it can allocate it to other parts of the pie. So you can go in here and you can say, I've got a spare $100 which I want to allocate, and you can go ahead and press 100, and if you're connected to your Bybit account, then you can go through and pay that with your spot, or you just create yourself a Bybit account and you can do the same. So super easy here, guys. And again, Bybit on spot has 0 trading fees, so you can just straight away go and do this. Now, what I like to do with these bundles is whenever I have some spare cash which I want to park, where I'm not too sure exactly which coin I want to put it in, or I'm not super underweight any specific coin, then I'll go ahead and just throw it in a bundle. So I'll store it in this kind of a bundle, and then if I want to reallocate later on, or if I think, oh, I've got too much Bitcoin, I want to add some more to Phantom, I'll go into my Bybit account and I'll do that manually. I'll go and allocate more to Phantom if I see a particularly juicy price, or Near Protocol, or any other coin which I like. But just as a way of parking capital, this is what I like to do. And one of the reasons I like to do that is if I just leave it in my bank account, I'm going to spend it. I'm human just like everybody else. So I like to put it into the exchanges, so that way it's allocated. I'm not going to be like, oh yeah, I want to buy those new pair of trainers, I'm going to sell some Bitcoin. I will never do that, right? Whereas if it's just in my account, easier to make those superfluous purchases. With that said, let's now get straight back here into the Bitcoin chart, because there's a few things I do want to share with you on the weekly chart as well. Remember that we said that Bitcoin used to use the 200-week moving average as support. If I zoom out here, you will see that we lost that, right? We've covered this plenty of times. We're now below it. So now what we seem to be doing is using the 300-week moving average. So you can see the 300-week moving average is the next one that needs to hold. If we cannot hold this, then things are really going to look ugly, and that is where my price target of those 14,000 levels are coming to fruition. Don't listen to those people that are just shouting out random numbers. There's loads of those right now because we're in the middle of a crypto winter. 8,000, 9,000, 6,000. Ignore those people. Follow the data. Let the technical targets give you the data. And that's what I'm seeing here. The only reason I'm saying this 14,000 range is it's given to you by the previous support levels, which I've shown. Now, also, the support level from this moving average, the 300-week moving average, is at 17,700. Now, it's interesting. Why is that an important level? Well, we know that the wick, when we fell in June, was around that level as well, 17,600. So this is going to be an important level for us to hold here at this 17,600, 17,700 level. Now, if we do get a wick down to that level, I personally will be nibbling, because there's no guarantee we're going to get lower prices. So I've got to take the opportunity to nibble, but I'm not going all in. So if, for example, example, I have $1,000 to allocate, I would be allocating in chunks of 100. I'm going to wait. I'm going to say, okay, if we hit 18,500, I'll buy a little. If we head to 18,000, I'm going to buy another 100. If we head to that 17,006, maybe I'm going to buy 200-300 worth, right? And then if we fall lower, then I want to see how I'm going to allocate the rest. So instead of just being like all in or nothing, try to use the nibbling tactic. It'll help you to avoid FOMO, but at the same time, make sure that you've got enough in the market that if the market did rotate and run, then you've got enough in the market. Now, as you guys know, from a macroeconomic perspective, I'm not expecting a massive run anytime soon. I'm expecting this crypto winter to last a little bit longer. And the only narrative that I can think will play out, and I think this is just the inner hopium within me, does Bitcoin finally, in the midst of a global financial crisis, prove itself as the antidote? And this is what's interesting. If you go back to the 2008 crisis when this whole liquidity crunch happened, you had contagion, you had literal European countries knocking on the door of the IMF to get them out of trouble and to bail them out. Remember Greece? And many banks struggling to the teeth. At that point, we had no decentralized money. We had no Bitcoin. We had no cryptos in the early stages of being incarnated, right? But now, what do we have? It's there. It's been around. It's been battle tested. People use it. Countries have adopted it. Many companies have it on their balance sheet. You and I know how to transact in it. So now going into this financial crisis, if it does indeed go into a financial crisis and a deep depression, which is what I'm feeling might happen given all the signs I'm seeing, then at least we've got that antidote, which hopefully the narrative can play out that whilst the normal traditional financial markets continue to tumble, can we see that decoupling? And right now, we are seeing early signs. I don't want to jump the gun here because it's not helpful to do that. And I'll just be confirming my own bias, but we are seeing a little bit of signs that we are doing that. And the way I see that is this. If you look at the price points here on Bitcoin, we've held up. We're not quite at our June lows. But if you look at the NASDAQ, let's go and do this right now. If you look at the NASDAQ here, we are now well below the June lows. The June lows were here. You are now well below them. Same on the S&P. Look at the S&P. Well below the June lows, whereas Bitcoin is higher than the June lows. So that is showing that the narrative, something is going on. It is holding up pretty well. Now, whether that will continue, that's a little bit of a leap of faith, but that is one of the narratives I'm looking to see. How does it perform if the global crisis continues, if, as the IMF says, growth continues to contract, many companies enter official recession, how does Bitcoin emerge? Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. Check out the links to Bybit, links in the description, to buy yourself some of those token bundles. Go watch this video here, and I'll see you in the next one.